Hey everyone, in this particular video we are going to discuss about the RBI Priority Sector Lending Amendment Direction 2026. So recently only RBI has amended the PSL guidelines. Okay, so one by one we are going to discuss about each and every amendment. So let's get the discussion started, guys. First of all, let's understand what the priority sector lending is all about. So as the name says it all, we are giving priority to some of the sectors in case of lending. By lending, we mean the bank is giving loans and advances, right? Now what priority sector is all about? We are giving priority to certain sectors. Why we are giving priority to certain sectors? Because everyone in the world exists to make a profit, right? So is the regulated entity like banks and NBFCs. They also exist to make a profitability. Whether I talk about commercial banks or other categories, everyone wants to make a profit, but there is a priority that the lending, that the credit should flow to these specific areas of the economy as well. Why? Because if the credit is not flowing to these areas in the economy, how the country will be able to grow as a whole, right? So PSL is all about a RBI mandated framework which ensures that adequate bank credit flows to the economy and socially important and underserved sectors. Right, so we'll also be talking about the different sectors which are regarded as PSL in the PSL lending. So the applicability is commercial bank, all the RRBs, small finance bank, local area banks are also included in this. Primary cooperative banks and UCBs basically, except the salary earners bank. So this is the applicability criteria of the priority sector lending. From 1st April 2025, they are applicable. Right, and they are going to replace the earlier direction which were there in 2020. So basically it's nothing but some amendments which we have to incorporate in the earlier guidelines only. Okay, so this is the scope and application and regulatory criteria, right? Commercial and cooperative banks are there in it, and these are the priority sectors. I will say if you lend to these sectors, the PSL norms are fulfilled, or I can say the PSL limits are fulfilled. So every bank here requires to lend a certain percentage of the deposits as PSL. So you can lend to agriculture, in the MSME side you can also lend for the export credit purpose, for education purpose, for housing purpose, for social infrastructure, for renewable energy, and there are some other sections as well. So these are the priority sectors. So RBI is encouraging the regulated entities to lend in specifically these areas, and that's why every bank is having a certain percentage that it needs to fulfill, right? So let's suppose the bank is getting 100 rupee in terms of deposits. Out of this 100 rupee, you need to lend a certain percentage as PSL loans in these segments, right? So what this percentage all about? It is not actually based on directly deposits, but we calculate Anbc. What is Anbc? Adjusted net bank credit. Adjusted net bank credit. This is nothing but a base amount. So the bank Anbc is 100 rupee. So the PSL percentage will be determined on this Anbc. Okay, on this Anbc. Basically, it is determined based on two criteria: Anbc or CEOBSE. What is the CEOBSE? Definitely we'll be discussing about the CEOBSE as well, but one by one, let's try to understand each and everything. So the very first thing is PSL is based on a percentage on higher of two amounts: Anbc, CEOBSE, right? So percentage of Anbc or CEOBSE, whichever is higher. Right? What is Anbc? Anbc is nothing but basically bank's total loans minus certain deductions plus certain additions. As per the RBI guidelines, there is a methodology of calculating the Anbc, right? And here is the methodology. This is how we are calculating the Anbc in India, right? This is how we have to calculate the Anbc in India. Now let's don't ignore the complexities and try to cover the amendments rather than, right? Because the crux of the video is about covering each and every amendment rather than going into too much detail of the procedural part of the circular. Okay. Now what is CEOBSE? It is nothing but credit equivalent of off balance sheet exposure. What do you mean by off balance sheet? There are things which are on balance sheet, say for example liabilities, say for example assets for a bank. There are certain things which are off balance sheet as well. That means they are not included in the balance sheet. They are not included in the balance sheet. Say for example bank guarantee. If I am giving guarantee on somebody's behalf, right, and maybe that person defaults in the near future, I will be liable in that case. But as of now, am I liable? No. My liability starts when the person defaults because I have given a guarantee on his behalf, right? So that's a kind of bank guarantee, which is a kind of off balance sheet item. We also call these items as contingent liabilities, right? We also call these items as contingent liabilities. Now they are part of notes to accounts and not your balance sheet. Why? Because these are not quantifiable. I can't quantify exactly whether the liability will happen or not, right? So there are so many uncertainties involved in it, right? It can be a commitment, it can be a derivative instrument, it can be a letter of credit as well. So these are off balance sheet items. We include only those things in the balance sheet which we can quantify in terms of money, right? And this is as of now not quantifiable, or I can say the future course of action will decide about the actual liability. So as of now, we treat it as a off balance sheet item. We are not keeping it in the balance sheet, but for the sake of PSL norms, we calculate Anbc, we calculate CEO BSE, and we take whichever is higher. So PSL percentage is all about higher of Anbc or CEO BSE. And why do RBI even care about these kind of things like the contingent liabilities and the off balance sheet items? Even if we are not lending money directly to someone, this is also called as a non-fund based facility, right? If I am giving a guarantee to someone, I have never given a single penny, but I can say that I have offered a non-fund based facility. I am just guaranteeing, I am just giving a guarantee for that particular person. That is also a liability that can happen in the near future, and that's why RBI is quite concerned about these things as well. And PSL is defined as a percentage of these two figures, right? So the very first thing here is the item fifth in the table 6.1. Okay, so this is the table 6.1, and we can see the fifth item is all about here the long-term bonds for infrastructure and affordable housing. Okay, so this is about the long-term bonds, this one, the long-term bonds for infrastructure and affordable housing as per the Reserve Bank of India. Resource raising norms direction 2025. Now earlier, this is nothing but a mere circular change. Okay, so earlier in this particular line, we were referring to an old circular, right, which was dated approximately in July 2014, and now the RBI has just deleted that particular reference and have changed the reference to the RBI resource raising norms direction 2025. We all know that the RBI has actually consolidated a lot of directions in the year 2025, and that's why the earlier direction is now not relevant, and it is just a mere change in the reference of the direction, I will say, right? So pehle we were using the reference of 2014 direction, now we are using the reference of 2025 direction. That's it, right? That's it. So exemptions related to the long-term bonds for infrastructure and affordable housing will now be governed by the new consolidated direction 2025 and not the earlier circular, right? Now the next change can definitely be important, which is related to FCNR and NRE deposits. Okay, incremental FCNR and NRE deposit exemption logic, which is now based on dates. So have RBI changed something related to FCNR and RBI and NRE deposits? No, it's just a base date clarification. It's just a more clarity that RBI has given, and there is no change in the intent. Okay, so let's first understand what is FCNRB and NRE account. Okay, now this FCNR stands for foreign currency non-resident bank account, right? And NRE stands for non-resident external account. Now the crux of this particular account is, let's try to first understand the NRE account. Okay, NRE account. So let's suppose I'm living in USA. If I want to open an account in India, so whatever I'm earning in India, so I'm earning good salary in USA, I'm doing a job in USA, I'm earning good salary in USA, but I want to keep that money in India. Is it possible? Yes, it is possible, but I have to open a NRE account with any bank. So I can open NRE account with HDFC Bank or SBI Bank and so on, and I can deposit whatever I'm earning from USA in the NRE account, right? That's what NRE account is all about. But I am earning in dollars. when I'm depositing that in the NRE account, I have to convert it into INR. I have to convert that into INR, right? That is the problem. That's the problem. Okay. Now, it is very good for the Indian government. Why? Because somebody from the outside India is bringing foreign currency into India. Okay. It's bringing foreign currencies into India. FCNR. FCNR B deposit account is there to overcome the limitations of the NRE account. Now I can do FD. I can do savings as well in this NRE account, but the problem is I have to convert the dollars into INR. When I convert the dollars into INR, I severely face issues because of the depreciation in the value of the INR. To overcome that, we do have a concept of FCNR also. I can even go for FCNR account. So again, I am living in USA. And please do remember, this is just an FD account. So I'm earning in dollars. I want to make an FD in India. I want to make an FD in India. But I want to keep my money in dollars only. Because I don't like INR depreciation. Whenever I'm taking out my money in terms of INR, again I have to convert it in USD, right? And because of that, I have to face severe financial loss because of the forex difference. Right? So Indian government, or I can say Indian banks, will be keeping your money in the dollars only. But this is a FD account. Right? So in both the cases, it is quite beneficial for the Indian government, for the Reserve Bank of India. Why? Because foreign currency is coming in the country. Right? So that is the concept of FCNR and NRE account. Here only the incremental advances funded by the eligible FCNR and NRE deposits calculated between the specified base dates can be excluded from the Anbc. Now it can be quite complex, but let me just quickly simplify. Because you are bringing more and more foreign money into India. A bank, say for example HDFC Bank, is bringing more and more money in terms of dollars, whether it is from FCNR account or it is from NRE account, doesn't matter. You are bringing more and more dollars in the economy. That's good for the central bank. Why? Because we have a lot of forex reserves now. Because HDFC Bank and similarly other banks are bringing more and more dollars in the economy. Similar for the other currency, maybe it can be pound or any other currency, right? So definitely the RBI will be giving special treatment to these kind of deposits. Why? Because during times of forex stress, rupee volatility, external shock, we can use dollars to counter that volatility. So RBI is giving special treatment for these kind of deposits. Now RBI is encouraging to attract more and more NRI deposits in the form of foreign currency to strengthen the India's forex position. So earlier RBI, I'm talking about earlier only, okay, there is no change except the date classification here, the base date classification here. So because attracting more and more dollars is quite important for a country like India, that's why RBI used to give, and it is still giving, CRR, cash reserve ratio exemption, SLR exemption, Anbc exemptions as well. Sir, what do you mean by Anbc exemption? Look, if a bank sources, let's suppose $100, right? $100. Or let me just give you one more example. Let's suppose if the Anbc of a bank is 100 rupees and the bank is sourcing money actually up to 30 rupees from this FCNR, or NRE account, okay, from this FCNR or NRE account, right? So do you have to maintain PSL as a percentage of 100 or 70 now? You have to just maintain PSL norms on 70. So let's suppose your PSL norm is 60%. So you have to lend 60 rupees out of this 100 rupee to the priority areas, right? If a bank is having 100 rupee as the NBC, 60 rupee you have to lend in the priority sector areas. But if you are getting dollars or any other foreign currency via the FCNR or NRE account, you have to only, your Anbc will be treated as only 70. So I can say that if I am reducing your Anbc, that means you don't have to keep that PSL norm on the rest of the 30. So it is beneficial, right? It is beneficial. Now I have to only lend 60% of 70 rupees instead of 60% of 100 rupee, right? So I can lend to more profitable areas instead of just PSL. I don't like lending in agriculture, I don't like lending to MSMEs or so on. So I can say that I have more space now. I just have to maintain the PSL norms on this 70 and not 100, right? So this is a big relief that RBI has announced earlier, right? So this was the PSL benefit, that you don't have to, kind of calculate the PSL norms on this benefit on this particular FCNR and NRE deposit. You can reduce it from your Anbc. You can reduce whatever deposits you are able to source from the FCNR and NRE account from your Anbc, right? But there was certain confusions. There were a lot of confusions, like what do you mean by incremental advances, right? They have written incremental advances here. So if you check this, only incremental advances funded by eligible FCNR and NRE deposits need to be calculated. Now, from which date I have to take this incremental advance? So RBI has clearly clarified that the base date is 26th July 2013. The outstanding advances reference date is 7th of March 2014 for the banks and 13th of June 2014 for the urban cooperative banks, right? So this is how RBI has clarified. For the sake of simplicity, would love to give you an example, right? Let's suppose my outstanding advance is 900 crore. 900 crore is my outstanding advance, right? My outstanding advance after some time. So this is my base year. This is my base date that RBI has given, 26th July, right? And let's suppose on 7th of March 2014, my outstanding advance is now 1100 crore. My outstanding advance is now 1100 crore. Can I say that I have gained 200 crores? I have gained here 200 crores. That's the incremental advance. That's the incremental advance that I have gained, right? In terms of foreign currencies, in terms of foreign currencies. But out of this 200 crore, the FCNR and NRE deposits are approximately 180 crore only. 180 crore only. So that's fine. I can reduce my Anbc by this 180 crore. I can reduce my Anbc by this 180 crore. So let's suppose my Anbc is 1000 crore. I can reduce this 180 and that's the benefit. Otherwise, I have to maintain the PSL percentage on that Anbc, which is 1000 crore. Now I have to just maintain the PSL on 1000 crore minus 180. Whatever the resultant is, I have to maintain the PSL norm on that particular figure. So lower the figure, better it is for me. Why? Because I am not, kind of band gaya hoon ki I have to lend to the PSL norms only. I can give to other profitable areas as well, right? So that's the amendment. What is off balance sheet item? We have already discussed. Okay. So this is nothing but a referencing change. I will say change in the reference. So earlier RBI used to give a reference for some other direction related to the off balance sheet item, and now we do have concentration risk management direction 2025. So they have just changed the reference. Okay. Now this one is going to be important for your examination related to FCNR and NRE deposits, but rest of the things are not important in this particular change. Okay. Next one, guys. Now this particular amendment is also, I will say, interesting one. This is regarding the small finance bank. Okay. So let's suppose earlier you are an NBFC or an MFI, right, and converted into a small finance bank later on. So earlier you are an NBFC or you are an MFI. So PSL norms were not applicable on you. But the moment you turned into small finance bank, now PSL norms are applicable. Now the PSL norms are applicable, right? So when an NBFC or an MFI becomes a small finance bank, it never starts from zero, right? Because NBFCs and MFIs are also giving loans and advances in their respective areas. Now, if they are converted into small finance bank, can I say that all the balance sheet of the NBFC and the MFI, whatever the entity may be, will be carried forward as a small finance bank? So we do have some loans and advances, we do have assets as well. So we don't have to start from zero. We don't have to start from zero. So whatever loans existed before the entity became a small finance bank, right? These loans were created when the entity was NBFC or MFI, and they are funded by the borrowings from the other banks. Now, how NBFCs and MFIs are actually getting the funds? They are getting these funds from the banks, right? So bank has given funds to NBFC. Now NBFC has turned into a small finance bank. NBFC has turned into a small finance bank, right? So RBI has now allowing the loans to continue for temporary purpose under the old rules only. Now this is nothing but a grandfathering effect. Okay, this we call it as a grandfathering effect. Okay, that let's continue this particular transaction in the old rules and regulations only. Now some loans could get the PSL benefit twice. Now there is a problem of double counting in these kind of situations. I'll tell you how. Let's suppose there is a bank. Bank has given loan to NBFC. Loan to an NBFC. And this NBFC is using this loan for a PSL specific criteria. Okay, this NBFC is using the loan for a PSL specific criteria. So can I say that bank is eligible for PSL here, right? Bank will treat this loan as a PSL only. Why? Because bank will definitely apply this kind of loan in the PSL limit that I have completed my PSL obligation. I have also given a loan to an NBFC, and that NBFC is somewhere or the other using that money for the PSL purpose only. This is also kind of PSL eligibility loan. But the problem starts from here. The NBFC is now converted into a small finance bank, right? The NBFC has converted into a small finance bank. Now earlier the NBFC was not eligible for the PSL, but now the small finance bank is eligible for the PSL now. Small finance bank started saying that NBFC has given loans and advances to the PSL areas. We will start treating that PSL as the PSL for small finance bank. But there is a problem of double counting here. The bank has already taken the benefit of PSL here. The small finance bank wants to again take the benefit of PSL here by stating that NBFC has given the loans and advances further in the priority sector lending areas. So we will also enjoy the PSL classification for these loan purpose. Not allowed. Okay, not allowed. So here we can see that the small finance bank should not count these loans as its Anbc. Okay, to avoid double counting, the small finance bank will not count this particular loan as a PSL loan, right? Only the original bank which has given the loan to the NBFC will be counting this loan as a PSL loan, right? But whatever fresh assets you are definitely creating after becoming a small finance bank, you can continue to count those loans as PSL if you are actually lending in the PSL, but not the earlier one. Right? This has been done to resolve the problem of double counting. Okay, we were having a double counting problem. So let's suppose bank A has lent, this is a bank A has lent 100 crore rupees to an NBFC. Now NBFC lends to a small borrower. NBFC has lent this money, let's suppose in the PSL areas. But the problem is, now the NBFC is a small finance bank after conversion. So can small finance bank treat the same loan as a PSL? By saying that the NBFC has given a PSL loan, so I am a small finance bank, I have given a PSL loan, it is as good as I have given a PSL loan. So can I count this PSL loan in my own balance sheet? No, that's not possible. That's not possible because the bank has earlier taken the advantage of the PSL loan. This will create a double counting issue, and that's why it is not permitted at all, right? Now this one is going to be the super important part of the circular. Changes in the small finance bank. We can see here that the targets are defined in this particular table. Even I have defined the sub targets. I have taken this particular table from the circular itself, right? Instead of making my own table, I prefer to take the reference of the table which is given in the RBI circular only, because I feel that this is very well structured. Okay, so can I say guys that here targets and sub targets are decided? So if I talk about the total priority sector in terms of domestic commercial bank, if you are a domestic commercial bank, and then you need to give 40% of your ANBC, your 40% of your ANBC or CEO BSC, right, whichever is higher, for the purpose of priority sector. So let's suppose if you are a commercial bank, you are getting 100 rupee. Out of that, 40% you have to apply to the PSL areas. Similarly, if you are a foreign banks having less than 20 branches, then again 40% is applicable for you guys. If you are a regional rural bank and RRB, now RRBs are specifically for the rural development, right, in the rural areas, for providing banking services in the rural areas. 75% is decided. 75% is decided. Sir, but there are no changes in the direction. We have read the earlier direction. There also it was 40, 40, 75 only. Then what is the change? Small finance bank is the change, and this is going to be super important for your examination. Earlier, small finance bank has to contribute 75% of the Anbc or CEO BSE, whichever is higher, but now only 60% needs to be contributed. So there is a reduction. Sir, why there is a reduction in the PSL norms? Are a small finance bank, if they contribute 75% of their Anbc or CEO BSE, then how they will be able to expand their portfolio, right? So that's why RBI has decreased the limit from earlier 75 to now 60. Earlier the limit used to be 75, now it will be just 60 only, right? So this is one of the most crucial change, I will say. You can later on refer to the sub targets as well of different categories, right? Revised norms. So what earlier used to happen in case of small finance bank is they used to have 75% as their PSL, right? Out of that, 40% they need to allocate to the core sectors. Sir, what is this core sector? We do have so many PSL loans, right? We do have so many types of PSL loans. It can be agriculture, education, right? Housing and so on. Out of that, there is a core sector classification by Reserve Bank of India. Out of all those sectors, certain sectors are kept in the core category. So whatever 75% you are going to lend as PSL, 40% of that should be flowing to the core sector areas. Rest your choice. Rest your choice. So it can flow to core areas or non-core. So core and non-core both are part of the PSL criteria only. Both are part of the PSL norms only, like agriculture, like housing, like different categories. But out of all these, kind of PSL list that we have seen earlier, some are in the core sector and some are in the non-core sector. So rest of the 35% is the choice of small finance bank. But there is a change now. Now it is just 60%. Now it is just 60%. So 40% you have to again allocate to the core areas. Rest of the 20%, now it will be just 20% only instead of 35, because RBI has actually reduced it by 15%. This you can contribute in any area. So this is the new structure here, right? And the same amendment we have covered. I think it is the news which came in July, I think 2025, July or August 2025. So we have already covered it multiple times, but this is a consolidated amendment direction. So that's why I have covered it here as well. Okay. So this is the main crux here. Foreign banks with less than 20 branches. So what was the earlier concept? These branches do have a limited physical presence and cannot lend much to agriculture and small borrowers because they are foreign banks. So RBI allowed them to meet the PSL mainly through export credit. So here you can see that 32% can be in the form of export credit. Out of 40%, the foreign banks can meet this 40% criteria. 32% can be directly in the form of export credit. So you are giving credit to the exporters that will fulfill your requirement, right? Now the RBI focuses on diversification as well. So some lending must go to MSMEs, housing, social infrastructure and energy projects as well. So because of that, I will say rest of the 8% can go to any other priority sector lending as well, right? Then if I talk about RRBs, they are mainly operating in the rural areas only, promoting agriculture, and MSMEs are dominating their lending practices, right? The overall target will continue to be 75% only, but lending to medium enterprise, social infrastructure, renewable energy will be counted only up to 60%. No problem at all. If you want to do more than 60%, do it. We won't be counting that in PSL. Only up to 60% of your Anbc will be counting in the medium enterprise, social infrastructure and renewable energy. You are giving loans more and more to medium enterprise, social infrastructure, energy. No worries at all, but we will be counting only up to 60% only. Your target is 75%. Your target is 75%. Out of that, 60% you can lend to these entities. The rest of the 15% must flow to other entities. The whole idea is RBI wants the RRBs to focus more on the primary activity of agriculture, small borrowers and rural economy. This is the major change here, right? Now the next one is related to the export credit under PSL, right? So whenever we talk about export, there are certain credit types, like it can be pre-shipment credit, it can be post-shipment credit, or it can be on the on-balance sheet loans, right? So here the very first thing is only on-balance sheet loans are applicable here. The off-balance sheet export items are excluded from this particular export credit. So if a bank is giving an export credit to an exporter, definitely that's a PSL eligible loan. That's a PSL eligible loan. It doesn't matter whether the loan is for pre-shipment, it is for post-shipment, or it is for any other on-balance sheet category loan. Both the above categories are on-balance sheet category loan only, right? Acha, what do you mean by pre-shipment? Let's suppose the exporter is taking the loan for buying raw materials for manufacturing a product and then shipping it, right? So that's a pre-shipment credit. Or maybe the exporter has already shipped the goods, right? So the exporter is yet to receive the money from the importer, right, which is outside India. So that's a kind of post-shipment credit. Why? Because he'll be receiving money maybe after 2 months, 3 months and so on. So again, the exporter also needs money for the post-shipment activities. So here that will be classified in the post-shipment credit, right? So credit period दिया है तो exporter also wants a timely repayment, तो अभी वो नहीं आ रहा है तो exporter has taken a post-shipment credit for that, right? So this can be export credit under PSL. All these things are eligible for becoming as a PSL loan, but off balance sheet export related items are excluded here from the classification, right? Plus there is a clarity also which is very much awaited, and RBI here has completely clarified that let's suppose there is a farmer. Now this farmer has actually exported the agriculture produce, right? So this farmer has actually exported the agriculture produce. Now the problem is definitely it is going to be a PSL loan, right? The bank has given loan to a farmer. The farmer has produced the agriculture produce and the farmer has exported it outside India, right? Outside India. So now whether this will be an agriculture loan or a export loan or a export credit loan, right? So what will be the classification here? RBI has clearly specified that this is going to be the loan for the agriculture purpose, okay? This is going to be the loan for the agriculture purpose. So export credit to agriculture and MSMEs shall be classified under their respective PSL category and not separately as export credit, okay? So this is again going to be an important question for an examination. So if a bank has given a loan to a farmer, this is going to be an agriculture loan only and not an export loan, even if subsequently the farmer has exported the same, right? And here we can see the export related guidelines as well related to PSL. All are same only, right? Rest everything is the same only. Next is the update related to the loans. So loans up to 12 crore rupee per borrower for building healthcare facility. So let's suppose I am a bank, I have given a loan to a borrower. That borrower wants to build a healthcare facility in the tier 2 to tier 6 centers, right? So tier 2 to tier 6 centers. The loan limit amount is 12 crore rupee per borrower. In case of UCBs, the equivalent share are those with population of less than 1 lakh rupees. So let's try to understand this one. This is again a priority sector lending classification only. We know that social infrastructure is also falling in the priority sector lending, right? So building hospitals, healthcare facility, again if somebody is taking loans for building hospitals and healthcare facility, that's also kind of a PSL eligibility criteria loan only, right? So earlier the banks could give PSL classified loans to build the healthcare facilities definitely, but the loan amount limit was lower, okay? Plus the coverage of smaller towns was narrower, and as of now we can see that tier 2 to tier 6 centers are covered and the loan limit is now 12 crore rupee per borrower, okay? Per borrower. So this is again an important update. This is also again going to be an important update. For the urban cooperative banks, the tier classification will not be applicable. So tier 2 to tier 6 classification is for the rest of the category. If you are falling in the urban cooperative bank, if you are a UCB, you are giving a loan for the healthcare facility, then tier classification won't be applicable on you. Instead, RBI uses population based criteria. So population less than 1 lakh rupees should be there for the UCBs to become eligible for PSL categorization related to such a kind of loan, right? So that's the update here. Next is the update for the microfinance framework, right? So microfinance loans are basically small ticket loans which we give it to the low income individuals or the SHGs or the joint liability group, right? The purpose is for the basic livelihood and consumption purpose and small economic activity as well, right? So I will say that these loans are core to the financial inclusion, and that's why RBI always treats these kind of loans as a priority sector lending, right? So these loans are PSL eligible. So in March 2022, RBI has actually issued a unified regulatory framework for the microfinance, and that's why we need a corresponding update in the PSL norms also. So microfinance are now defined by the borrower characteristics and not by the institutional type or the loan purpose. So that's why there is an amendment which was required in the PSL norms also. So the new rule is here is microfinance loan are again qualifying as a PSL only if they satisfy the criteria mentioned in the master direction regulatory framework for the microfinance loan, and also the credit facility direction for 2025. So this is just a quick update. This is just a referencing change that RBI has done in the microfinance wala direction, right? Then RBI has modified the third element here. The revised list now clearly shows the beneficiaries under NRLM. NRLM means National Rural Livelihood Mission, National Urban Livelihood Mission, and Self-Employment Scheme for the rehabilitation of the manual. So look, let me just quickly give you a brief background about this before starting this one. Okay, just give me a second. So guys, have a look here. The beneficiaries under the government sponsored scheme. So there are certain government sponsored scheme like NRLM, like NULM, like SRMS. Now NULM, which is National Urban Livelihood Mission, is no more, right, eligible for the PSL criteria. So this is now deleted. Okay, this is now deleted from the list. Okay, this is now deleted from the list. So as of now, we do have only NRLM and the SRMS. Okay, that's the quick update. Next in the para 18, it is related to the loans which are subject to securitization. So securitization, as the name says it all, we are converting a illiquid security or illiquid loan into securities. Okay, so it is nothing but the process of adding liquidity into a illiquid asset. So say for example, loans are an asset for a bank, right? But they are illiquid. So to make them liquid, banks or financial institutions follow a process of securitization. So what they do is they convert that loan into marketable securities, right? They convert that loan into marketable securities, which we call security receipts. Now you can easily sell security receipts and receive the money, right? Nobody is interested in buying loans, but people are actually interested in buying marketable securities because they are freely transferable, right? They are freely transferable. Now say for example, bank is giving loans and these loans are PSL eligible. These loans do have the PSL eligibility, right? Now bank is actually bundling these loans and selling these loans as securities. Right? In that manner, whatever loan bank has given, let's suppose for the next 5 years, bank is able to sell these securities and bank is able to get the money back. So I can say that here bank is able to cash out the money even before 5 years. So loans now move off balance sheet, right, off the bank's balance sheet, plus the ownership of the loan gets transferred here. Why PSL classification becomes tricky? If the bank securitizes the PSL loan, can those loans still counted as a PSL? Because the banks have actually converted the loan into security receipts. Now, can these security receipts be still counted as PSL? Yes or no? These security receipts can definitely be counted as PSL, but in order to avoid double counting loans that no longer belong to the bank, or misuse of securitization to meet the PSL targets, these were the problems, right? Earlier, the PSL benefit was allowed only if the original loans were PSL. So if the pool of the loan is PSL eligible, the securities will also be PSL eligible, right? but the reference was given related to the older securitization guidelines. As we do have the new securitization guidelines now, definitely Securitization Transaction Direction 2025 is stated instead of the earlier guidelines. So I can say that it is again a referencing amendment, right? It is again a referencing amendment, but you need to understand these securitization wali receipts, right? These securitization wali securities are now again PSL eligible if the loan in itself was PSL eligible, right? If the loan in itself was PSL eligible. So the first condition is loans were PSL originally. The securitization is done properly as per the RBI rules. Assets are standard in nature. It should not be an NPA. It should not be a non-performing asset. Okay. Then the PSL benefit is allowed. Otherwise it is not. Okay. Otherwise it is not, and it is going to be done as per the Securitization Transaction Direction 2025. So again there is a referencing change. Plus, external auditor certification of the originator is important now. Sample checks to be conducted by bank or its auditor as may be specified in the bank's internal policy. So again, external auditor certification here becomes a compulsion here. Okay. So securitized PSL assets, the bank may rely on external auditor certification and or sample checks can be done specified in the internal policy to verify the priority sector status. Now, how I can be sure that these securities are PSL eligible when the loan is PSL eligible, right? So I need a certification from the auditor who is clearly certifying that these loans and the securities created out of that loan are PSL eligible. Okay, so that's a new requirement that you have to learn here. Now here the next one is the transfer of asset through direct assignment or outright purchase. So let's suppose a particular bank has directly assigned the loan to some other bank, or maybe it is a kind of outright purchase, right? So in this case, the pool of asset by the bank representing the loans. Bank A is having some loans which are PSL eligible, which are in the PSL categories, right? So in this particular case, the following condition needs to be satisfied so that the bank B who got the assignment or purchased the loan from bank A is also eligible for the PSL classification. These assets are originated by the bank and financial institution and are eligible for the PSL advances prior to the purchase. So prior to the purchase, these loans were PSL eligible. Yes, they are eligible and fulfill the Reserve Bank of India transfer and distribution of risk direction. So there is a transfer and distribution of risk direction as well. Why? Because ultimately you are transferring some risk, right? These are loans and loans do carry risk. So the directions of the RBI is complied with. Plus these loans are initially PSL eligible before the transfer. Both the conditions are satisfied. Great, right? Then bank shall report the outstanding amount actually disbursed to the PSL borrower and not the premium embedded amount paid to the seller. Look. The bank shall report the outstanding amount. Let's suppose the outstanding amount is 100 crore. Okay. And not the premium. Now for transferring, bank A has charged some premium of 1 crore rupee from bank B. So will it be 101 crore or 100 crore? For the PSL eligibility, it is only going to be 100 crore. It is only going to be 100 crore. So the premium amount will not be eligible. Only the outstanding amount will be eligible. Loans against gold jewelry acquired by the banks from the NBFCs are not eligible for the priority sector status. So those loans that are acquired by a bank from the NBFCs were having certain gold loans. Now these gold loans are transferred to a bank that's not falling in the PSL eligibility here. Okay. So that's the amendment of the 19th para. Okay. Now the next one here is related to the IBpcs. IBpcs bought by banks on a risk sharing basis. But sir, what do you mean by IBpcs? IBpcs means interbank participation certificates. So banks are sometimes buying the interbank participation certificates from the other banks, right? So let's think like one bank gives a part of the loan exposure to another bank on a risk sharing basis. So I am a bank, I am giving you my part of the loan, right? For the risk sharing basis, definitely we'll be going to share the risk as well as the rewards also related to the loan. But now RBI is explicitly saying that if a bank buys IBpc, that too on a risk sharing basis, then that particular loan exposure shall be counted as a PSL right? Let's suppose that's my loan. I have transferred it to you via IBpc, interbank participation certificate. That is a PSL loan, right? So if that loan is a PSL loan, whether you will also be getting the PSL benefit? Yes, but only if the original loan classifies as a PSL loan, right? If the original loan eligibles is having the eligibility or is having the qualification of the PSL loan, right? The bank follows the RBI latest rules also related to the transparent distribution of the risk, credit risk direction 2025. Then in that case, definitely the IBpcs will also be treated as normal loans only, and you will also be getting the PSL benefit, right? You will also be getting the PSL benefit, but this is not applicable to the LABs, local area banks, RRBs and UCBs. Okay, this is not applicable to the RRBs, local area banks and the urban cooperative banks. I have given an example also, the same example that I just told you, that let's suppose I sold my IBpc, I have a loan, I sold as an IBpc to you guys, right? Then in that case, if my loan is PSL eligible, then that IBpc is also PSL eligible for you guys. Okay, so you can also take the benefit of the PSL here. Okay. Next one is related to the PSLC. Now what is PSLC? Priority Sector Lending Certificates, right? Priority Sector Lending Certificate. So this is a certificate, it is not a loan, right? So bank use it to buy or sell priority sector achievements without transferring the actual loan. So I am a bank, I want to sell my priority sector achievement, but I don't want to transfer the actual loan, right? So what I will do is, I want to keep the original loan in my books only, but I just want to sell the priority sector credit. So there is a concept of credit. If I have achieved my target, I do have some priority sector credits, right? I can sell it. So definitely banks are allowed to buy and sell the PSLC as per the RBI latest guidelines. Earlier, the circular references are removed, and now the new circular references are inserted. So now how the PSL classification will work? Now RBI says that if the net nominal value of the PSLC bought or sold will be counted as the priority sector lending only if the original loans are falling in the criteria of PSL. So if my original loan is PSL, so I can easily sell my PSLC as well to you guys, and that will again give you a PSL eligibility. You can take the benefit of that particular PSLC, right? This is the new guideline with which they have replaced the earlier one, right? With which they have replaced the earlier one. Now guys, the next one is related to the MFI. So loans disbursed by bank to MFI are eligible to be categorization as the PSL advance under the respective category. It can be agriculture, it can be MSME, it can be social infrastructure and others, right? But the new para that has been inserted is bank shall obtain an external auditor's certificate. So bank has to obtain an external audit certificate from that particular NBFC confirming that on lending benefit in respect of such loan has not been claimed by any other bank. So let's suppose bank A is giving a loan to an NBFC. Now this NBFC is further giving loan to the respective PSL category. So is this a PSL loan? Yes, it is a PSL loan, and this is called as on lending. This is called as on lending. Why? Because the bank was the first party, the second party is the NBFC. So bank has given loan to NBFC, and NBFC again is giving loan to the end consumer. So for bank, this is a kind of on lending, right? For bank, it is a kind of on lending. So here an external auditor certification is required from the NBFC, right? Confirming that it's only the bank A which is fully liable to claim the PSL and not any other bank has claimed the benefit of PSL, right? So this update has been done in the bank loan to the MFIs. So the MFIs are nothing but NBFCs only. So the banks can treat the loan which is given to the MFIs as priority sector lending, right? That's allowed in the PSL guidelines. So the money is used ultimately to the giving the loans and advances to individuals, to SHGs, right? And so on. End use falls in agriculture, it falls in MSMEs, it falls in social infrastructure or any other category related to the PSL, right? So now explicitly the RBI circular states that external auditor certificate is required from the MFI or the NBFC, which is clearly confirming the fact that the benefit of the PSL has not been claimed by any other bank, right? So say for example, bank A has given a loan of 50 crore to this MFI. Bank B has also given a loan of 50 crore to this MFI, right? The same borrower pool is used. So MFI has given 100 crore rupee loan to a same pool of borrowers. Now both the banks claimed it as PSL. RBI wants to stop this practice where the partial money obtained from bank A and bank B goes into the same pool. Okay, so this is causing a concentration risk here. So only one bank can claim the PSL classification here as per the on lending rules. So auditor certification is required, right? Let's suppose if I talk about bank A, then auditor certification will be required that no other bank is claiming the same benefit for the same pool. Okay, plus small finance bank rule is also applicable here, which is already there. Okay, so this is not at all an amendment. The MFI GLP, what do you mean by GLP? GLP stands for gross loan portfolio. Okay, gross loan portfolio. So the MFI gross loan portfolio is less than or equal to 500 crore. The PSL through the MFI is less than or equal to 10% of the last year PSL, and this is calculated based on the quarterly average. Okay, but the most important requirement is the introduction of the external audit certification here, right? Okay guys, so the next one is related to the bank loans to NCDC. Now what is NCDC? National Cooperative Development Corporation. Okay, National Cooperative Development Corporation and bank credit to the HFCs. So bank credit to the HFC, let's suppose a bank is giving credit to HFC, Housing Finance Company, which is now approved by NHB. Okay, so National Housing Board has actually approved the HFC, and this is for the purpose of on lending basis. That means bank has funded HFC, HFC is funding someone else. HFC is funding the proceeds of the loan for the purpose of purchase, construction, reconstruction of a individual dwelling unit, right? Or for the slum clearance or the rehabilitation purpose. Now this will also be classified as a PSL loan, right? This is also classified as a PSL loan, but there is an aggregate loan limit of 20 lakh rupee per borrower. So only up to 20 lakh rupee per borrower this loan is going to be classified as a PSL. Okay, plus external auditor certification again is a requirement here. External auditor certification again is a requirement here, right? So this is for the HFC. This is for the HFC. Now the external auditor certification is there for the NBFC, for the HFC, for the NCDC as well. What is NCDC? National Cooperative Development Corporation. So let's suppose the bank has given a loan to the NCDC, National Cooperative Development Corporation, for on lending purpose. Now this NCDC is further giving that particular loan to the cooperative societies, and what is the purpose? In the activity they are specified in the PSL norms. Okay, they are specified in the PSL norm. So is this a PSL norm for the, is this a PSL eligible loan for the bank? Yes, it is a PSL eligible loan. Okay, subject to the NCDC furnishing quarterly certificate by the CAG, Comptroller and Auditor General of India, empaneled chartered accountant firm, to the lending bank confirming that the bank credit has been used for the extending of loan to the cooperative society. So here the whole idea is, bank is giving loan to the NCDC. Is it classifiable as PSL? Yes, it is classifiable as PSL, but the NCDC has to furnish a quarterly certificate. That quarterly certification will be done by a chartered accountant, which is empaneled by the CAG, right? To the lending bank, to the bank, confirming that the bank credit has actually been again extended as a loan to the cooperative society. So this confirms the crux of the transaction. This confirms that the end use of the transaction has been for the development of the cooperative societies here. So this is the amendment, guys. Okay, this is the amendment here. So external auditor certificate is the crux, I will say, of most of the amendments in this PSL guidelines, right? In this PSL guidelines. Next one, bank credit to the NBFCs and the NCDCs or for on lending basis will be eligible for the PSL classification up to an overall limit of 5% of the bank's total priority sector lending of the previous financial year. Now this is going to be super important, and this thing can come definitely in your examination. Okay, the total PSL contribution. Now you know that bank can contribute to NBFCs, right, including the HFCs also. HFC is also kind of NBFC only, to the NCDC also, right? And these are again on lending. These are further lending the proceeds obtained from the bank, right? This is PSL eligible. This is PSL eligible definitely, but there is a limit. There is a limit. Limit is 5% of bank's total PSL limit. Whatever the total PSL was there based on the last financial year, right? Based on the last financial year, at least 5%, at most, maximum 5% you can give on an on lending basis to NBFC, HFC and NCDC. That is the limit. So this limit can definitely come in your examination directly, right? This is a combined cap, no separate cap is available. On a combined basis, you can lend this much to, again, NBFC, HFC and NCDC, not more than that. If you are lending more than that, that's fine, but it will not be PSL eligible, okay? It will not be PSL eligible. So the RBI imposed this to the banks to lend directly to the farmers, MSMEs and housing instead of just on lending again and again. So RBI don't want the banks to make it as a outsourced PSL completely, right? We are just pouring money into the NBFC, HFCs and so on, and you do what you want to do. No, it should not be like this. Banks should directly infuse credit, right, to the priority sectors rather than just doing it via. Okay, so that's the crux. Then if I talk about co-lending, here banks are again permitted to enter co-lending agreement for the lending purpose to the priority sectors, right? So let's suppose there are two banks, Bank A and Bank B. Let's suppose the loan amount is 1 lakh rupees. So 60% Bank A is giving and 40,000 Bank B is giving. So 60% and 40%. This is called as co-lending. This is called as co-lending, right? So they are jointly giving the loans and advances to someone else. In that manner, definitely the respective share of the PSL can be availed by both the banks. So Bank A can avail 60% of the PSL and Bank B can avail the 40,000 wala 40%, okay, respectively. So that's nothing but co-lending only. That's nothing but co-lending only. Now the EMI will be split automatically. Definitely you will be earning the benefits in the ratio of 60-40 or whatever the ratio will be. So accordingly you can claim the PSL as well, okay? Accordingly you can claim the PSL as well. This is the upgrade. The next update is again a crucial one, service charges. This is related to the service charges. So let's suppose no loan related charges, including guarantee fees or any other fees related to credit guarantee scheme, and ad hoc service charges or inspection charges, or by whatever name you call it, on a priority sector loan up to 50,000 rupees. So no loan related charges can be levied on a priority sector loan which is up to 50,000 rupee. Now as per my understanding, this is also going to be super important, okay? This is also going to be super important. So loan up to 50,000 rupee, which is a PSL loan, will not attract any kind of charges. Any kind of charges will not be leviable on such a kind of loan, right? In case the eligibility of priority sector loan to SHG and GLG, right, JLG, this limit will be applicable per member. So in case of a SHG self-help group, right, this limit is going to be per member and not per group, okay? So that's again a great benefit for these SHGs and JLGs. So guys, that's it about the priority sector lending. The most important thing in this particular guideline is this one, from 75% to now 60%. This is for the small finance bank, and rest of the other updates which can be important I have again discussed in this particular video, right? So thank you so much guys. You can definitely read the priority sector guidelines now and just have a quick look related to the amendments that we have covered in this particular video. Okay guys, thank you so much. Bye bye. Take care. See you soon.